What's up, guys? Welcome back to my channel.
Earn it, save it, invest it.
In this video, I'm going to quickly go over the easiest way to make $1 million. Now, I know some of you might like the quick, right? There's the get rich quick schemes, and this is not get rich quick. This is a get rich easy. It's the easiest path that I believe to make $1 million. It's very easy for almost anybody to do, and I'm gonna go over it really quick within the next, under 10 minutes or so. First things first, if you can give a like or subscribe to this channel, that'd be amazing. That's all I ask. I am gonna go over the stock and the process that I believe is going to get you to $1 million, that can get you to $1 million. The process, I'm going to be using a compounding interest calculator to show you exactly why and prove how it can make you this money. And I'm also going to go over the risks and the things that can go right and the things that can go wrong, right? Just because normally something has high risk or something that has a high reward also has high risk, right? That's just how it is in life. So there is a higher risk to this, but it's already been proven to pay off, and it's been proven within the stock in itself already, and it's also been proven over time with other stocks. So I'm going to quickly go over it right now, and let's get into it. So the stock that I am talking about is TQQQ. Now, if you follow the indexes, you know of the Dow Jones, the S&P 500, the Russell 2000, and the NASDAQ. The NASDAQ is the one that has most of the technology and all of that, right? It's definitely tech heavy. So the QQQ, right? No T in it, just the QQQ. It tracks the NASDAQ. The NASDAQ is at 19,000 something, right? So if you wanted to buy one piece of the NASDAQ, right, just one piece of stock, it costs you $19,000 to do it. The QQQ is a lot less. It's in the hundreds. But what happens is when the NASDAQ goes up 1%, the QQQ goes up 1% as well, right? It tracks it the same amount. Now, the dangers with the TQQQ is it is 3 times leverage, right? So you could just essentially think about it 3x everything. So if the NASDAQ and the QQQ, if those go up 1%, TQQQ will go up 3%. But that also means if it goes down 1%, the NASDAQ and the Qs, then TQQQ will also go down 3%. So it is a more volatile stock. It goes up a lot more and it also goes down a lot more. It gives you more opportunities. To me, what it does is it gives you more opportunities to buy. If you are not up to high risk, the thing is, if you're just buying over time, and I'll go over the process, but I make it the process really is a lot less risky than what people might think it is. If you just put all your eggs in the basket right now, that's risky. You don't want to do that. But I'm going to go over different strategies to how you can make tons of money fairly easy buying this stock, TQQQ. And first we're going to break down what it is, right? Let's go over its holding. What is TQQQ? All right, so this is on the website, right? This is on their website, proshares.com, and I could put in the actual website up there, and it says leveraged and inverse, right, /TQQ, because inverse and leverage means it's using essentially like borrowed money in a way. And I'm not going to go into the details about it, but that's why it's more volatile. It's 3x, right? But TQQQ has all of these stocks in it, right? These are the stocks that it has. So it's an index. An index is, you could essentially think of it, and I'm sure most of you know what an index is. It's like a bubble or a bag that has a bunch of stocks inside it, right? So if one of those businesses and companies goes bust, your whole bubble doesn't go bust. You still have, 500, 100, depending on the index you have, right? Your companies, if one goes bust, your whole bubble doesn't. Right? So you could put your eggs into one basket without really putting your eggs into one basket, right? You could put most of your eggs into the S&P 500, but essentially your eggs are still spread out into the 500 companies. This is the TQQQ, which is essentially the Qs as well, QQQ, right? But it's leveraged. So they have Microsoft, Nvidia, Apple, Amazon, Broadcom, Meta, Netflix, Tesla, Costco, Google, Palantir, T-Mobile, Cisco, and then the list goes on and on. As you can see, it's just like the normal stock market. The big dogs are at the top. You have Microsoft, Nvidia, Apple, Amazon, Broadcom, Meta, Netflix, Tesla, Google, Costco, right? Palantir, all those ones, they're heavy. And it shows how much of that index it holds. So Microsoft right now is 5% of the TQQQ, right? So, and it also shows right here how many shares and contracts I have, the market value of it. So it breaks it down of exactly what the TQQQ is, right? It shows what they're holding, and the list goes all the way down, right? And you can see that there are some very minuscule holdings. Biogen is 0.07. Semiconductor 0.07, then you have 0.06 ARM Holdings. So you have these, ones, you have Kraft Heinz, which has nothing to do with technology, right? It's only 0.12%. So even though, yes, there are these other companies that are part of this bubble, if Microsoft and some of the other companies do go bust, the bubble will go a lot more bust, but these are really safe companies. So that's just kind of to quickly break it down on what the TQQQ is and what you're essentially, if you invest into this stock, what you're kind of investing into. So now let's break down the actual performance of TQQQ. So over the years, TQQQ, it was made founded, the index was created in 2010. And I'm actually going to use that as a good starting point because it's 15 years exactly. And I'm also going to use a couple other points as like good examples. But I'm going to start from the beginning, 15 years. Now, June 1st, it was around 37 cents. 37 cents, June 1st of 2010. Currently, it is $70, right? Now, there's different ways you can look at it. Oh, I could have invested $500. I could have invested $1,000, bought X amount of the stock, and now it's worth this much, right? That's one way of thinking about it. That's really putting all of your eggs into one basket, and that is very risky. What you want to do is put some money into it and then invest over time. You still want to invest over time. Even as it's going up, you still would have made plenty of money at $7, at $8, at $10. You still would have made money. Now, it would have been a lot less, of course, but you're still making money. So back then, it was 37 cents. Now it is $70. The biggest thing when it comes to stocks, you don't want to think about exactly how much it went up in price. You want to know how much it went up in percentage points. So going from 37 cents to $70 is $69 and what is it, 43 cents? Sorry, 63 cents. $69.63. But what's the compounding annual interest rate? Now, if you know anything about compounding interest, it is a gold mine. Essentially, in my last video, I kind of broke it down, and I'll break it down again really, really quick. And I'll break it down in kind of like the simplest way. But if you have $100, right, and you go up 50%, now you're at 150, right? 1 year, you're now at 150. So now the next year, you go up 50%. You didn't go up $50 again, because 50% of 150 is actually 75. So now you go up 75. So now you're at 225. And you make 50% again on that year, right? So now 225, 50% of that is $112.50. So as you can see, every year, even though it may have gone up only 50% each year, that 50% is still giving you more every year. So the compounding interest really plays a big part of it. So what you want to find out is exactly what is that interest rate? What is the compounding interest rate for the stock? So I found that out, and I love this website, bankrate.com. It has a compounding interest calculator, and I use it all the time. So what I did was I put it at 37 cents over the next 15 years, right, to now. And it's $70, right? This is what the end result is. And as you can see, the rate of return is 41.84%. Right now, currently, TQQQ has been giving an annual compounding annual interest rate of almost 42%, which is insane. The average compounding interest rate of the stock market, is represented by the S&P 500, has been approximately 10% over the long term, right? Now, if you also, include, interest or inflation, then you're looking at like maybe 6 to 7%, maybe even worse over the last 5 years, right? And the inflation was horrible. But because TQQQ is 3x leveraged, even though it says, the S&P 500 has been approximately 10%, well, that means it's about 30 or so percent too, right? The NASDAQ has been a little bit more than the S&P 500. So the TQQQ will be obviously a little bit more as well. But the point is, 42% on your money compounding interest is ridiculous. So we have the 37 cents, right? Now let's say we took and we put $1,000 into that over the last 15 years, and you put no money into it, you'd have $189,000 right now, and you would have only invested $1,000. I wanted to check what a recent, some people will say, 37 cents, that was when it first came out, right? And that's true. That makes sense. 37 cents is when it first came out. That was basically at its lows. When I zoom in, if you could see, when I zoom in here, 37 cents all the way down here is at like its low. It's never really touched that. It never touched that again. And that was at the very inception of this index. So I'd understand people being skeptical about it, right? So let's take something recently in 2022. It reached $16, $17, $18, right? It was reaching those levels. Okay. You can even look back, all the way over here, it reached $10, but we're going to go recently in 18. At that low in 2022, you could see that the 37 cents to the 18, it's still, the average rate of return was 30%. 30%. That's still a big amount. So if you take $1,000 over the next 15 years and you just do 30%, and you actually contribute just $50, remember 30% on the low end, then you have $151,000. Let's say you have $1,000 and you invested over 26 years, and and your average rate of return was only 25%, and you contributed $50 per month, you would have $1.1 million. $1,000, you don't touch it again. You just put $1,000 in, maybe you do like 500, you do 250 over the next 4 months. Something like that. $1,000, whatever. After that, $50 a month. For the next 26 years, the likelihood of you having over $1 million is, I would say, high. Because you could see when it reached this point, 18% or $18, that was still at a 30% return. Now you're going to say, okay, but now it's at 70. Now it's at 70. Oh my gosh, what is it going to have to be? What's that going to be? I'm buying at the highs now. Okay, well, let's say I looked at it. It was at $10 right here in 2018. Okay, here was a big crash, and you could say, over here it's still high, right? 2018, $10. That was it was at $10. It was 6.3 years ago. Your average rate of return is still at 36%. 36% over the last 6.3 years. So as you can see, unless you buy a whole bunch at the very high and you are at the very low at that current time, that's when you're going to have a bad rate of return. Otherwise, it seems like you're just going to have a good rate of return as long as things continue to go up. Now, this is again, there's always going to be risks, right? It went down the end of 2021 all the way, right? December 2021, it went all the way down, and it took January 2023. So it took over a full year to drop, but then it's boom right back up, and then it dropped again, yes, and that's going to keep going back up, and that's the history of the stock market. That's the history of this stock. That's what happens. But I'm just showing you the numbers behind, not just of what could happen. This is what has been happening. This is what the stock has been doing over the last 6.3 years, over the last 15 years, over the last 10 years. This is what it has been doing. So let's just say you take $500 right now. Over the next 25 years, you get that 25% return and $50. Now you got $765,000, right? Now, obviously, I think it was this one's a 1.1, right, million if you had $1,000, right? The only difference is your starting point, really, right? You went from 500 to 1,000, and as you can see, what that does, having a starting point does make a difference. But you want to just invest over time, and this is a 25% rate of return. You can get that realistically. Let's say, let's go into something realistic. $500, 25 years, 20%. Let's go 20%. Okay, you're at 330, but you invested $100 a month. $614,000. Now, some people are going to say, man, 25 years, that's a long time. But it's only $100 a month. To not exactly guarantee you this money, but you started with $500. I mean, the total amount contributed it says $30,500. And the amount that you have gained is $583,000. I mean, you're going to say no to that? And that's what I'm saying is that it costs you $500 to start and $100 a month. If it's, $1,000 to start and just $50 a month, you can have so much money. Even $370, like you can make so much money. You only invested $16,000 and you had now $362 in interest. Like that just seems like an easy way. Now this again is not quick. This whole video is not about let's get rich quick. It's about how can we make money easy. People want to make money in their sleep, right? People do want to make money quick, but that's just not the way to do it because people also lose the money quick. A lot of people realize that in order to make the money, like you could have the higher the risk, the higher reward, the higher reward, the higher the risk, right? So it's all up to you. At the end of the day, I'm not saying to just go and buy this stock, TQQQ. There's actually this article about this guy who's shorting it, who's going the opposite. There's another stock, SQQQ, SQQQ, right? And it's the opposite. When the NASDAQ goes down, this one goes up because it's like betting against it, right? It's shorting it. He's convinced that the Qs are going to go down. I'm not at all. Technology is just going up. Technology is going up and up and up and up and up, right? From our cars to our phones to our televisions to our freaking brains and the medicines and everything. Technology is going up. So that's why I do believe TQQQ is a very good stock to look into. Doesn't mean put all your eggs into the basket. I would just say put some of your eggs into that basket because it might be one of your easiest stocks to make money off of over time. There are some brokerages that won't allow you because like if you wanted to put $50 a month into it, you couldn't even buy one piece of the stock right now. It's at $70. There are some brokerages, Robinhood, where you can just do $50 every month into these, stocks, and then, you're good. I'm with Charles Schwab, and they do not offer TQQQ. They call it Schwab slices. So like they don't offer me partial shares. So I am unable to just buy, I have to buy a whole share. So I plan to do that. I have a challenge. I'm going to take $7,000 and try to turn it into $100,000 over the next 10 years. I think I can do that with the rate of return. Like I said, my rate of return, I think I calculated is going to be 20%, 20 to 25%. I think I can hit that. So, you know, I'm just gonna tell you what I think about these things. It does not mean to go out there and buy it. I am not saying go out there and buy it. Like I said, look into the other stocks. I have other stocks, multiple stocks that have made me a higher percentage and higher returns than this one. I have. You just have to do a little bit of research. Now the thing is, again, this is about easy, right? Trying to make it easy for you. So you can go into Robinhood. You can go into your brokerage account. I would definitely check into Robinhood because I know Robinhood does it really easy. You can literally just put $1 a day. You can literally set it up to buy $1 a day. You know, you could put, you know, $2 a day. So instead of $50, it's $60, you know, but it makes it very easy. Now, the whole point of trying to make that money is not to make it super quick because the odds are you're not going to do it. But if it's easy, the odds are you are because it's easy. And if you just try to put yourself on an automatic schedule, you just set it up, hey, every day it's going to buy X amount, or every month it's going to buy X amount, every week it's going to buy X amount. You set it up automatically. You continue to kind of look into it, right? You want to make sure the market is in a certain place, you know, but you don't need to dive into all the income statements all the time, right? Because I do that. I look at the income statements, the cash flows, and all of that stuff. And there's just, you know, people will get way overloaded looking at numbers, right? Seeing the revenue, seeing the income, seeing all the expenses, and just seeing everything. Just too many numbers. People don't like to see too many numbers. It can be overwhelming, and it takes a lot of time. So what you have to do is look into index funds. That's one of the easiest ways, again, to make your money. Now you could do it into the Qs. That's another easy way to make money, or the S&P 500. Those are the top indexes that I think, you know, that I recommend. But TQQQ is an easy way to make money. And so if you want to make easy money, I'd say look into that, be consistent, and be patient. You have to be patient because it's not going to happen quick. But if you're just patient, it will reward you. So yeah, go ahead and give a like and subscribe if you like this content. Sorry, it kind of took a little bit longer than I wanted it to, but I truly believe that this is the easiest way to make $1 million. What was it? $1,000 over 26 years, 25%, just $50 a month, $50 a month, and you can have over $1 million. Now I'm 36, so 26, I'll be 60 years old. If I have a $1.1 million and I'm only spending $50 a month, I mean, by then, that's going to be well over my Netflix subscription price, right? But, you know, in 26 years, that's in 2050, basically. Like, yeah, my Netflix subscription is going to be more than my millionaire subscription. If you try to think about it in that term, this is your millionaire subscription, $50 a month. You just invest a little bit of cash now, and you just, you know, put $50, $100 every month or something like that, and it's your millionaire subscription. You know, if you change the $50 to $100, now you're at almost $2 million. You know, so again, this is like it's a subscription. It makes it easy, right? And Netflix and all these people, they make it easy to take your money. Why shouldn't you make it easy to give yourself money, right? And to invest in yourself. So again, thank you for watching. Please like and subscribe if you like this. And never forget to
earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.